Hello, good morning. This is Erin Swenlin and Carl Swenlin from DecisionPoint.com. And we are here to bring you the charts that we think you should see going into the week. I have plenty to show you on this June 26th, Monday. So let's go ahead and get started here. I do want to mention that if you want to talk to us or put your symbol requests in, just go ahead and put that in the Q&A box. And if you want to chat amongst yourselves, I do have a moderator in the room and he will welcome you there, and go ahead and you can discuss what you're looking at today with the other members of the room. All right, Dad, I'm going to pass it to you so we can just get right on into this.
All right, not seeing much action today. It's according to Fox Business, it's because of what's going on in Russia. I totally disagree with that. Remember, the market is a sociopath, and its main interest is how does this affect me? That's the collective attitude of all the market participants. And I don't think what's going on over there has a lot to do with what the market is concerned about. Of course, it could turn into something much worse. But anyway, getting on with it. On Friday, we had a climax day. Let's look at that first. Climax day, this is as of Friday, and we had climax readings on all four of the relevant indicators. And we called it a downside exhaustion climax because we had an downside initiation right off of this top here. And so as an exhaustion climax, one of the things we were looking for is possibly an upside reversal, and that would have happened, in my opinion. We'd have seen evidence that was going to happen before the open today. And obviously, we're not getting that. So the exhaustion is for the down move, and it could be it's going to take a few days to churn and maybe continue down. But that's what we'll look for anyway. I expect it's going to continue down based on what I see here. Keeping in mind that next week is a holiday week. Monday is a half day for the market, and Tuesday is the 4th of July holiday. So I don't expect, we shouldn't expect much be going on Monday. And so it's basically a holiday week and really more extended than we normally, sort of like Thanksgiving week in reverse.
Mm-hmm.
Okay, so there's the climax. Let's get back to our candlestick chart. We've got a parabolic up move here. It's on a daily chart, and so it doesn't mean it doesn't have much in the way of long-term relevance, but we can expect a 50% pullback, probably somewhere in this area from the base of this parabolic up move. So that's not a horrible decline. Could turn into something worse. We don't know, but right now that's what we would be looking for. Looking at our indicators, here's the short-term indicator, and this is as of Friday. They are end of day, and since they're end of day, I use line chart instead of a bar chart for the SPY, because what happens under day is irrelevant in terms of these indicators. So we have negative divergences fairly long. This is a short-term indicator, and based on recent activity, these indicators are oversold. But based on more reasonable range, we still got quite a bit to go before they become oversold. Intermediate term, we have intermediate term breadth momentum and volume momentum, and we have a negative divergence on breadth. Volume is confirming the move, but they topped out in overbought territory, and we should expect to see them going into this area, general area. The dollar index is slightly down today, and that would be good for gold. Gold is up more than slightly, but 0.36% as of right now. I want to jump to the monthly chart for gold, which is not final, of course, until the end of the month. But basically, we're looking at 3 attempts to break through this line of resistance. These were spiky moves and parabolic in effect, and so they backed off rather quickly. Here, this is a more deliberate up move, and it's pulling back, has broken this rising trend line here. So that's not particularly good, but I still am thinking so we have a good support right in here. But right now, we could maybe expect some lower prices on gold based on this chart. We've broken that rising trend line. Okay. Crude oil, I'm using a weekly chart for crude oil, USO, and gives us a much better idea of the context. So we had the COVID crash, and then moving up to the most recent high in this chart, and then backing off slowly. It's kind of hard to understand why this is. It's not more attuned to moving up, but it's not. Looking at the monthly chart, there's some real context, and basically it's in this time frame, which is about 15 years, it's still scrubbing along at the bottom. Treasury bonds, this is the 20-plus year Treasury bond, TLT, and basically running in a sideways motion. Let's look at monthly. Okay, sideways, but coming off all-time highs, and basically we expect, with some up and down motion, we expect the bonds to continue lower in the long term. Here's the yield for the 10-year Treasury, which is live, and we've got a declining trend channel here. It's not horrific, but it's slowly coming off of this top. Looking at the yield array, we have from the 1 month to the 30-year Treasury. It's mostly inverted. We have right now the highest yield, this is as of Friday, is on the 3 month, and it's at 5.41. In the 1 year, which is my favorite, is at 5.25. Here we have Bitcoin. Bitcoin has rallied based on some talk about, I've lost track of it. It's meaningless, but it's some news that has been injected, and it's got Bitcoin rallying. If you look at the long-term chart, it is up against some pretty good long-term resistance here. Bitcoin, in my opinion, the cryptos are not worth anything. They're only worth what somebody's willing to pay for them. They don't have an intrinsic value, say like a savings account. And I wanted to compare that to the AI issue. We have the market has been rallying of last month or so on the news of AI, particularly as was reflected in the earnings report from NVIDIA. They had a huge move up on that. AI is real. I don't know. Nobody knows exactly whether it's going to have a good effect or a bad effect, but it certainly has the potential for a very good effect. For example, one of the commentators I saw this weekend was talking about that the effect is not just on stocks like NVIDIA, Apple, and Microsoft. It's also normal companies are going to be deploying AI, and it should have a great effect, positive effect on their productivity. So something to keep in mind. But it's not like smoke and mirrors like you find in crypto. Right now, we're looking at, I won't go through all the sectors, but right now, it looks as if real estate is going to have a dark crossover, right? Okay, maybe 20 is above the 50 by 1/100th of percent or a point, 1/100th. So we could basically, we did have it earlier today, a dark cross, and we're on a death cross for the 50-200 EMA. I think I'll leave it at that. Do you have any questions that I ought to be addressing?
Yes. They asked, honestly, since you have XLRE up, somebody requested a look at the weekly chart for XLRE. Okay.
I don't have a fancy version, but I can look at the weekly XLRE. Got a rising trend and a declining trend, basically a triangle. And what do we call that? An indecision
triangle. Looks like, yeah, it looks like a continuation pattern, but the declining trend is stronger than the rising trend for sure right now, I would say.
Yes. And we've got the weekly PMO moving sideways below the zero line. So obviously the negative pressures have control right now.
Let's see. I don't really have an answer on this one. For commodities, is there an advantage of using continuous futures over ETFs? Because futures trade almost 23 hours versus the 6.5 hours for an ETF. So it can take care of the gaps. I don't trade futures. I do trade the ETFs, but I couldn't really give you a comment on which one is better.
Well, the continuous contract futures charts are theoretical, but the ETFs are for real, or the contracts themselves are real time and trading instruments. ETFs are trading instruments, and they incorporate the contract rollovers and all the other pressures on it. So if I wanted to trade futures, commodities, I would use ETFs. I'm sure many people would say using the futures contract is better. I wouldn't dispute that. We have one here. Last week, your alert showed XLE had death cross via EMA. I follow the simple moving average. And the XLE had a death cross about 7 weeks ago. I thought EMAs are faster moving, so it happened later. I can't.
Well, I would say I can take that one. EMAs, we always talk about, yes, they are weighted toward the near term. And honestly, that tells me a lot because we had a lot of upside movement near term. And so that would shift your EMAs in such a way that they would be more bullish than the simple moving averages, which weight everything in that past whatever time period equally. So my opinion is that, okay, maybe you got that death cross early on the simple moving averages. And the reason we really hadn't seen that on the EMAs is simply because we do weight that near-term data more so than all of it. That would be my guess.
Yes. And one of the things, simple moving averages, exponential moving averages, their intention immediately is to smooth the price, just give you show what the average price is. And in that regard, there is not any difference. I prefer the exponential because it moves on the most recent prices. And whereas a simple moving average, when you have a big move, it tends to affect the average when it drops off. That never happens with exponential moving average.
Yep, no drop-off effect.
We have a complaint about the size of the charts. And guess what I forgot to do?
Well, mine is definitely set up. So when we get to my charts, we should be okay.
That unfortunately. Okay. I guess we'll switch.
And I don't normally monitor the chat room, but I did happen to see a question in there. And the question was, can you explain why the PMO parameters are different from the MACD and the PPO? They would like to know our rationale and why we use the parameters we do.
MACD is not a ratio calculation. It's arithmetic. So it doesn't it doesn't have the same relationship in terms of ratio across long time frames. The PPO and the PMO are similar. I just happen to be the one that worked out calculation on the PPO. I'm sorry, the PMO. And I guess.
But I know we use 35, 20, and 10. And a lot of times people ask me, well, why don't you use, I think the MACDs are 26, 12, and 3 or something. I can't think of what they are right now. But I know that ours are a little slower.
Right. So we use it because it was invented here.
Right. Well, and over time, I recognize the PMO's activity on that particular parameters. You can definitely change them. If you would prefer a little more speedy PMO than the 35, 20, 10 parameters, you are certainly welcome to change those to whatever you want. We just, when you look at a certain indicator with certain parameters for so long, it's best to keep them the same so that you're seeing the same story every time you look at them.
Okay. So you take it?
I shall take it. I'm going to do kind of a overview of the sectors. We looked at real estate in particular, but I'm going to look at pretty much all of these. We won't go into deep detail into every sector. We don't have time for that. But there are 2 sectors that I want to concentrate on today. And if you look at the PMO on all 11 sectors that we have here, you probably can guess which 2 I want to talk about. The only 2 really with rising PMOs going on right now. And I will tell you that with these 2, they may have the best looking PMOs, but they're not particularly healthy either. Let's go to healthcare since we're talking about being healthy. This was honestly my sector to watch going into this week. Obviously not having a very good day, but the reason being is I had a choice between two sectors, and that was healthcare and that was consumer staples. And I had to make a choice because I like to go with PMOs that are rising, and every other sector, the PMOs were not rising. I mean, here's comm services with a negative crossover on that PMO. XLY, which has been holding up quite well, the PMO is turned down. And a lot of these PMOs turned down in overbought territory. Here is consumer staples, which was one of the two, was the runner-up for sector to watch this week. And you can see that at this point, it was fairly easy to pick this one not being the sector to watch because we didn't have readings above 50% on the percent of stocks above their 20 and 50-day EMAs. We consider 50% the bullish threshold. If you're above 50%, you have a bullish reading. And if it's below, it's a bearish reading. We had to come up with some threshold that seemed like the best. And so we have bearish readings, really, when you look at how many are above their 20-day EMA and what percentage are above their 50-day EMA. These percentages are higher than the Silver Cross Index, which measures how many stocks have, how many stocks within an index have a 20-day EMA above the 50-day EMA. So this is kind of the main data, the 20 and 50, what's above it. And then we measure, okay, let's take it one step further. How many have the 20-day above the 50-day? So that particular percentage is lower than the percent above their 20 and 50. So we could see the Silver Cross continue higher, but it's already flattening out. So, you know, picking this one as the sector to watch, it is outperforming, but what's it doing? Not a whole lot. And as of today, given this decline, we've set up a small short-term double top, which suggests to me that this rising trend is going to be compromised once again. And so not where we want to have our money is in consumer staples. So even though it has one of two rising PMOs, it's not particularly healthy, looking good. Energy, we can see has that death cross that came in with the 50 crossing below the 200. We had already back here lost the silver cross that we had, the 20 drop below the 50. Energy really in kind of a trading range, really being whipped around by crude oil, which really can't seem to decide what direction it wants to go in. And you can see that energy looks very similar to the crude oil chart, which is in basically a trading range. And notice that participation is very, very low in energy. This certainly would be a place when we're looking for reversals when the market turns. This could certainly be a good place to look with the participation being so low. If the rest of the market starts to go and it starts to bring up energy, there's probably going to be a lot of bargains in there. But right now, not anywhere I want to be. Financials, again, that PMO turned down, and then notice how much we've lost in terms of participation of stocks above their 20 and 50-day EMAs. And in particular, we have a silver cross that's on the borderline here at 50%, but it is topped and is going in for a negative crossover. So XLF, again, an area where we want to find a lot of bargains, but right now in this pullback, not a place to be. Now here's healthcare, which was the other sector that did have the rising PMO. The internals are looking okay. We had the bullish threshold of 50%. It has been overtaken. We have readings well above that. Well, not well above that, but we have readings above 50%. So all of these look healthy enough. But you can see that we're seeing a little bit of depression on these participation indicators. The silver cross is pretty much, much lower than what we're seeing on percent of stocks above their 20 and 50. So honestly, the Silver Cross Index could continue higher here. But right now, we don't have the breakout. I really want to see that breakout. But with the market overall digesting that parabolic rally, we shouldn't expect the sectors really to have anything to look good at and anything to look good. But we do see healthcare does have kind of the setup for the breakout to come in. I mean, we do have the 20-day EMA above the 50-day. The 50 is above the 200. There's a golden cross on healthcare. So it certainly does have the setup with the PMO rising for the breakout. Maybe this is going to be one of the few areas that sees a little bit of strength going into this week. But I have to say, none of these sectors look that great. It's probably time to just sit back, watch your positions, and make sure your stops are in place and determine really, is this, is your stock going to weather this pullback, or do you want to just get out and wait it out? Because, we did get that downside exhaustion, and we're not seeing a whole lot coming off of it right now. The XLI sector, industrials, it had the breakout. It did pull back mechanically to the breakout point. I think industrials, really, when you're looking at a chart, this one honestly looks better than healthcare in a lot of ways. We are seeing the PMO starting to turn up, but mainly I like this price formation. It looks like a flag. We got the breakout. We're getting the mechanical pullback that you expect after a breakout. So this one could start lining up for a nice move to the upside. It's just the market in general doesn't appear ready to make the reversal upward yet. So I would expect to see industrials continue to, kind of consolidate sideways with the market, or a little bit move lower. This is the problem I really had when I looked at the chart on Friday, is that the participation, while well above 50%, is really starting to drop off as far as stocks above their 20 and 50. So that tells me that weakness is starting to seep in to this sector. So I kind of kept it off the list. But honestly, looking at it right now, based on price pattern, at least, it doesn't look that bad. Materials, I'm liking the fact that price is above these EMAs, and we do have, you can see in the thumbnail, we're circling the fact that we had a silver cross and a golden cross on materials. So that worked out pretty well, but we get the pullback toward those moving averages, starting to see a little bit of a rally here. So the PMO looking much better, actually, since, seeing these Friday. We now have another sector, apparently, with the PMO moving higher. So this is a surge above the signal line for the PMO on materials. So maybe materials is where we need to start looking this week. Just be careful, because right now, less than half of those stocks have price above their 20 and 50. So there's some work to do under the surface here for materials, but certainly lined up, not looking too bad, except for the participation readings. We want to see those really improve by the end of the day. Real estate, we talked about. I'm not going to go into that. Technology, can see is pulling back. It's really looking like the market. Tech has been leading, but this tells you really what's going on in the internals of the market. Notice the huge hit that we had on percent stocks above their 20-day EMA. When I'm in a stock and it loses the 20-day EMA as support, there's a high likelihood that I'm going to be selling it pretty quick. So when you see this many stocks losing the 20-day EMA as support, that tells you that your choices are going to be very limited. And the PMO is on the sell signal. Technology is in pullback mode. This is certainly a place we're going to want to come right back to when the market makes the turn, but currently not looking like a place to be, at least a place you need to be watching your positions very closely. XLU starting to turn over. It hit the 200-day EMA, was unable to get above that. This is not looking too good. I have to say, we have another PMO surge above the signal line on a really nice rally today for utilities. which is utilities is a defensive area of the market. So with the market pulling back, you might see some action in the defensive areas. And it looks like utilities is getting a little bit of love. But ultimately, we have less than 10%, less than 7% with price above their 20-day EMA. And, I need a stock that's got price above the 20. I mean, that's really, if I'm going to put a stock in my portfolio, generally I'm doing so because it's gotten itself above the 20-day EMA. This is really poor participation. So while it's having a good day, I would definitely be careful with the utility sector because it does look like it's not done pulling back currently. All right, so that is the sectors. Let's go ahead and we're going to go into the industry summary just briefly. I want to go ahead and flip the script a little bit and look at materials because that did look like a really interesting area today. Industrials didn't look bad either, but let's go to materials. There are fewer groups to look at. So what I like to do is when I find a sector that's very interesting to me, I want to go and find the industry group that I need to fish in. So I want to find the groups that are looking like they're starting to get new momentum or that things are going the right way. Aluminum, no, we have a PMO topped beneath the zero line. It's getting a sell signal. So aluminum, obviously not the material that you're looking at. Let's see, commodity chemicals. Looks like we are getting a rebound off of those key moving averages. The PMO does look like it is surging above the signal line. Stochastics do tell me that you do want to be careful, though, with commodity chemicals. We do want to see those stochastics turning themselves back up. They tend to be a nice early detection system. So they're not detecting any upside momentum here enough to turn themselves back up. So be careful there. Containers and packaging making a nice reversal, but again, stochastics not confirming just yet. Specialty chemicals making a move, it looks like above the 50-day EMA. Yes, indeed. So that's a good sign. PMO looking like it wants to surge above that signal line or bottom above the signal line. Stochastics not really on board just yet. Mining has not been a good area. I would not be going over there. You can see a PMO top well beneath the zero line. Non-ferrous materials, PMO is starting to turn over. We're in a declining trend. So really trying to find some strength within materials is pretty difficult. Gold miners do see a little bit of a surge above the signal line, but I can tell you we have under the hood indicators for gold mining and really poor participation there. I don't think I'd be counting on that as a reversal play. Steel looking good. This looks like an area in materials that might be seeing a lot of the love. You can see that we have a move over 1%, and stochastics in this case have turned up. So might want to start taking a look at a couple of steel stocks. If you're in StockCharts.com, you just click this little button right here, and it will show you all the stocks that they have listed in that particular industry group. Certainly plenty of steel stocks to choose from. Steel Dynamics is a popular one, looking nice as it turns up off of the 200-day EMA. Nucor, looking nice as it's starting to break out in the short term. So another nice looking chart. You can see relative strength picking up for all of them. So that would be our sector and industry groups to watch this week going in. Like I said, I changed my mind from last Friday based on what we're seeing here. And you got to see real time me change my mind from going into the healthcare sector into the materials sector. I did record your daily five, so you are going to see me talk about healthcare. Go ahead and take a look at that, but you can see some of the good things going on. All right, Dad, I think we're ready to answer questions if we had any more.
How about how do I find out what stocks are in XLY?
All right. So I wish it were quite as easy as what I just showed you for industry groups. you can't get like all of them just by a click of the button. You're going to, if you want to do it, going by the industry groups, like I just showed you, is a way to do it. Otherwise, you really do, as far as I know, Dad, have to go into the scanning workbench, and you can set up a scan pretty easily for this. You go to the scan workbench, you just say, I want everything in whatever it is. And we'll say XLY. So we'll come down here to, oh, that's not what I need.
Well, this is too complicated.
Yeah, right there. You just go to the sector you want, consumer discretionary, add it in, run the scan, and you should have every stock that they have listed in discretionary. So that's the easy way that I know. It's not particularly easy, but it's not too complicated.
No, I know that StockCharts.com keeps track of the stocks in those 11 sectors, and they have lists somewhere. So we ought to find out where that is.
There must be.
It should be easy to find that. So that's something we can put on our to-do list.
Yes. What do you think about the question UNG being better in an IRA account than a taxable account?
I have no idea. That's a text question. And
yeah, that's for your CFP.
Yeah. We already talked about AI, so I don't think we have anything more to add to that.
Not really. I can just throw up the bots chart. This is robotics and artificial intelligence. Actually, you brought up one to me on Friday. Do you remember what it was?
Yeah, WTAI, Wisdom Tree AI.
There you go. So here's a way to play AI, but you can see the market is pulling back. AI is pulling back. It really tells you what was generating the excitement and the rally, in my opinion, when you see this. But it needs this pullback. You can see that support is right here at about $18 for this particular ETF. And I would look for a price to come down and test that in the 50-day EMA. It really got very extended. I don't think it's out of the question that you could get a pullback all the way to the 200-day EMA. But at this point, I think the market's just hitting the pause button. I think we're going to see the reversal at the end of, I don't know if it's going to be the end of this week, but I don't think it's going to be too much longer. So I don't know that we're going to get the decline all the way down to that 200-day EMA, but certainly things looking ugly on the chart.
Well, it just got overdone like really fast when NVIDIA jumped like 35% in one day.
Yep.
So it's
definitely a catalyst.
It's overdone. That's for sure.
All right.
Okay, let's start with some symbols here. CRWD.
All right. Okay, so the first charts I usually take a little bit longer just because I want to show you what's on them. RSI at the top tells us whether price is overbought or oversold. PMO measures momentum. The OBV tells us what's going on with volume, on-balance volume. The stochastics are, like I said, my early detection system. I find they turn faster than the PMO. And then I do relative strength analysis. I look at the group in comparison to the S&P because it's a good idea to be in a good sector and a good group because about half of your price movement is going to be determined by what sector and what industry group. So we want to make sure we're in an industry group that's outperforming. Then I compare the stock to the S&P and the stock to the industry group itself. That way we can see, do we have a leader within that industry group? In this case, it wouldn't be considered a leader in the group, but certainly it's traveling in line with the group. The group is not doing that great right this moment, but holding its own here. And against the SPY, CrowdStrike not doing the best. I have to say, when I look at this, my first thought is this is a hold because it is holding above the 50 and 200-day EMAs. The PMO is not doing what I want it to do. But as long as support is being held here, I would probably tighten my stop up to just underneath that 200-day EMA, because if it loses that level, we're probably going to see a test that goes down more toward that 120 level. So at this point, I think we could hold it and look for a reversal when the market stops this digestion phase. But if it loses this 200-day as support, I would not want to hold on to it. And if we go to a 5-minute chart, which is where we figure out where we want to enter and exit, exits are determined by a PMO, a 5-minute PMO turning over, topping. That's your sell point. Pretty easy. The buy point gets a little more complicated, but what we want on a conservative buy point is a 5-minute PMO positive crossover combined with a positive RSI. So in this case, we didn't get the buy so there's the crossover, but the RSI is not positive. So we keep moving. The RSI gets positive over here. So this would have been your buy point. So buy point, sell point. So this chart is very helpful for that. So at this point, if I came to the chart and it was like, do I want to sell? I could make a case to sell it at this point, but like I said, I know that it's sitting on that support level. I'm going to be watching that. The 5-minute PMO, though, tells me that I do need to keep an eye on this one.
Okay. BAC, that's Bank America, isn't it?
Yep, sure is. All right. Well, like I said, financials are kind of making their way, pulling backwards, well, as with most sectors. Don't like the look here. This is certainly a nice rally today. No doubt about that. Honestly, we talk about a breakout and a mechanical pullback. This is a breakdown with a mechanical pullback toward the breakdown point. The PMO is decelerating a little bit, but boy, it's on that crossover sell. I don't know that I would be selling it here simply because we did get that reversal on it, but then you can see that relative strength is starting to pick up just a little bit, at least on the end of last week and into today. So that's a good sign for it. It tells me I want to hold this. This is pretty strong support right here at this low and in this low. So I think that this would be a pretty good stop level. Again, a lot of times when I get the negative crossover, I'm going to sell it right away. But in this case, I don't think you need to do that. You've waited it out this far, and now we're getting the rally, and this is a strong level of support. So I don't know that I would be a buyer here because I don't like to buy anything where the PMO isn't turned upward. So I don't think this would be a buy for me, but I could certainly see holding it a little bit longer.
DRM.
Okay. Salesforce. Pretty much in consolidation mode, unlike that AI ETF. It's taking its time just, digesting its move with sideways consolidation. So that's a positive right out the gate. PMO is in decline, so this is probably not the time to be counting on a reversal. Certainly, like I said, we've seen some more pullback. I think we could see some more in the market. So again, I don't know that I'd be entering too many positions right now. I'd be more interested in managing the ones that I have. I could see this as a hold because you're certainly holding above that 50-day EMA with no problem. The PMO is pulling back, but like I said, price is just moving sideways. So I think that that's a healthy move backwards on the PMO. I would just want to wait until it gives me a turn. You can see we had two false kind of turns on the PMO. I guess that wasn't actually a bottom, but we did get a bottom back here, fake out, came back down. OBV is declining right now with the declining trend. So not a place to buy, but certainly I think you could hold this one.
GNRC.
Generac. This almost needs a log scale chart. Big, long basing pattern. So I think that's a good sign. Let's look at this on a weekly. Yep. Nice big basing pattern, double bottom setting up here in the longer term. Scooter is now above 70 in that hot zone, I like to call it. That tells you the StockCharts technical rank measures how well the stock is doing on trending condition, primarily in the intermediate and long terms. There's a short-term component to the calculation, but it only is 20% weighted toward that rank. So I really like having the StockCharts technical rank on a weekly chart. Gives me a really good sense of what the internals are. And right now the internals are very good for Generac, and certainly looking good in the intermediate term with this double bottom setting up. But let's get back to the daily chart. We're now hitting 200-day EMA overhead resistance. I like the way this is set up. The group is doing well. I sure would like to see Generac performing better against its group. I can tell you that, but it's in line and the group is moving higher. So you can see a little bit of rising strength with the relative strength. It's rising. So I could see that. Honestly, I could see an entry here. I prefer to get those confirmations. A confirmation would, of course, be a breakout, but I'm going to miss part of that move. Let's see how much move I would miss. Yeah, that's a lot of move to miss. That would mean about 6% that I have to watch and wait to get that breakout. I think this is, you could make a case to this is worth a try. Let's go ahead and look at the 5-minute. Certainly no buy point right now, PMO in decline. So if this one is something you're interested in, and it does look kind of interesting, I have to say, you're going to want to wait for that 5-minute PMO to start making the turn to the upside. But so far, not so much. So I think you can get a better buy point than what you have here.
UNG for a buy.
All right. I know you follow this chart and we both own it. We have to say that. I'm assuming you still own it.
Yep.
Any opinion on your side? I'm making it a log scale chart just so that we can see the price movement better.
Yeah, I don't know what's going to set it on fire, but when it does get on fire, I really expect a good return on it.
Yeah. I know that I didn't add to my position, but last week I did talk to DecisionPoint Diamond subscribers about UNG. Actually, I think it was the week before last. I could be wrong. Yeah, I think it was the week before last. And I was noticing that, UNG is finally starting to look pretty good, but we've had a couple of fake outs here. Here's a PMO buy signal fake out. Here's a PMO buy signal fake out. Really, we got a little bit of a move, but we really didn't get the breakout. And now we're getting another one. And the question is this going to be a fake out? We're going to know a lot more when it gets to this point here where we had that high. It looks right now like it's going to break out from there, but we do have a bearish filled black candlestick, which tells me we hit overhead resistance, might need a little bit of a pullback before it can ricochet up and off of resistance. But this is really the best setup we've seen in quite a while. I'm contemplating adding to my position, but I don't think I'm going to do that until I get a pretty solid breakout above this May high. And we just don't have that quite yet.
The PMO is above the zero line now. So that's pure. That is pure. It's rising. It's pure strength. It's not just, it's not drifting higher. It's pure strength. So yeah, that's a good sign.
Yep. So we do like it right now. And like I said, contemplating, I have a very small position and I'm considering adding to it.
Okay. ALB.
Albemarle. Okay. Specialty chemicals. We were looking in materials. So I'm glad to see a chart from this area. This one, not the strongest that I've seen. We can see relative strength just out the gate is kind of fading here a little bit for this stock. PMO is fading. It is turned over. But we did get to the 20-day EMA. We're starting to see a little bit of a rebound here, which is nice. RSI is positive. So price is not overbought. It's actually in the top of its 2-week trading range. So that's a good sign. Looks like it's going to go in for another breakout above that 200-day EMA. The PMO has not quite turned up yet, so I'd be very careful with adding this one. Certainly no reason to sell it. It's holding support the way it needs to. So while I don't think that I'd be adding it necessarily, I think there's a little too much risk here on an addition just because the PMO hasn't quite turned up. But I could also see, if you have a higher risk appetite, this is the kind of stock you could take a chance on. 5-minute PMO though, just moving below the zero line. I don't see a buy point yet today, and I would be watching this one for a better buy point, but certainly we're getting a little bit of a rebound here. Could be the beginning of a turn on the PMO, but again, a higher risk movement here. RSI is very negative. I think the 5-minute chart certainly needs to mature before you jump on this one.
ASX.
All right, flag formation. Nice flag pull here, flag coming off of it. And now we're getting a rally. It hasn't quite broken that declining trend on that flag, but it's close. Certainly intraday it has. PMO overbought and topping. Stochastics moving below 80. I am seeing some outperformance here against the group, and it needs it because the group isn't performing all that great. I think this looks like the beginning of an early move, but this is the kind of stock I get involved in simply because that PMO is so overbought. But we also talk about winners that keep on winning, and advanced semiconductor looks pretty good. I think I'm going to take a little bit of a detour here, and I want to look at the semiconductors under the hood. We don't have all the industry groups. We have a couple of very important ones. So do I want to get involved in a semiconductor? That's why I'm looking at this chart. I don't think so. You've got a PMO sell signal. Look at the participation is really shrinking here. Stochastics moving down, and notice the underperformance that we're getting in this group. I don't think that this is a group I really want to go toward, especially if we're going to be in digestion, pullback mode for the market in general. This is one of the leaders areas. It's going to help lead it to the downside, in my opinion. So I'm not a fan of ASX, and I'm not really a fan of semiconductors right now. Certainly looks like it's having a good day. No reason to sell it if you own it. I think it's just a little bit early on this move. And when I look at that semiconductor chart, I think it's going to be tough to find the winners. This one could be one, but.
Okay, X.
Yes, we talked about steel earlier. Good to see some steel stocks in here. Let's go for it. I like the look here. There's what was a double bottom. It's still kind of in force here, but really it hit its upside target when it got to this level. Looks like it's going back up for another test of that 200-day EMA. Given the PMO is now back above zero, RSI is positive, stochastics are above 50, net neutral 50, so they are in positive territory and they are ticking back up. I like relative strength. I think that this looks good. We did look in materials. We found that steel was the area of strength within materials. I think this one looks good. Let's go to the 5-minute candlestick. Could be considered a buy point. It would be a aggressive move to get in right now. The RSI is positive, which is why I think you could make a case to get in earlier. But the PMO is still in decline, which tells me there's a really good chance the price is going to fall from here and I'm going to get a better buy point. So I would probably be waiting a little longer on this chart, but it does look pretty encouraging. This is we've got 3 candlesticks now with positive movement. I think you can make a case for entry.
Okay, the next question is X versus STLD versus NUE.
Okay. Well, let's go back to the X chart. There's your relative strength against the group. It's mostly sideways. What's the relative strength with STLD? Definitely trending lower. So I would say Steel Dynamics, just based on relative strength, we're checking which one's stronger. And Nucor seems to be the winner. And looking at the price pattern and the PMO, I would say it's definitely the winner. You can see outperformance against the group. It's outperforming the S&P. The PMO is above the zero line and rising strongly. And you even have a little tiny breakout here on Nucor. So I think if I had to make a choice of what steel symbol to look at, I would say Nucor looks best.
Okay, FCX.
All right, non-ferrous metals. So we're back in materials. In the midst of a pullback, PMO is surging above the signal line, so I like that. RSI positive. Stochastics aren't really telling us that this is going to be the breakout. We might have another situation where we get the move, but we don't get the breakout because of what stochastics are doing. Don't pay too much attention to the relative strength for FCX. The way StockCharts has them listed, FCX is pretty much like the only stock in there. So its performance is going to look a little bit wonky, but it's doing well against the S&P. So kind of flag formation. I don't think we have quite enough information here. And it is a pretty big rally today. Certainly could make a move, continue higher here off this flag formation. I don't know. The PMO surge really does have me interested, though. 5-minute chart, probably about the best buy point you're going to get with the PMO moving sideways. Price moving up pretty much consistently at the same rate of change, which is why you're getting this flat PMO. I don't know that you're going to get a much better price point today.
Google, is it consolidating or bearish?
Well, it is bearish. We're going to know a whole lot more what's going to happen with this 50-day EMA. I don't like to see the PMO accelerating its move downward a bit here. That's kind of a problem. Rounded top. Do you have an opinion on this, Dad? Because I know you do follow this chart.
Get to a weekly.
You bet.
Okay, it looks like it's in a pullback mode right now. It's certainly not, consolidating. So I would wait till this down move is done before I look at it.
Yeah, and as far as holding it, I think I'd tighten up that stop, up to under that 50-day EMA. You could certainly, this is where your support lies. See the gap right here? And the 50-day EMA. So it really comes down to, do you want to wait it out until it comes down here and tests support and then maybe loses it? Might be a good idea to tighten that stop up to under the 50-day EMA or somewhere around here. Let's see, what does the percentages look like? Yeah, 5% stop would get you below this particular support area. So that would be kind of your stopgap in case this is turns out to be more than just a pullback. But I think the weekly chart looks pretty good.
What do you think of Intel?
All right.
Look, it was a 2-symbol question.
There it is. One or the other. Intel, you can see, does have a rising trend on its relative strength to the group, which is something you need. All of these semis, you're seeing a lot of overbought PMOs pulling back. This certainly looks encouraging as a second day of rally, and stochastics are starting to turn up just a little bit. Again, for me, I need a PMO rising before I enter a stock, but that's me. Certainly could take a chance here that this rally will turn into something more, but let's look at AMD in comparison.
You have 5 seconds.
5 seconds. AMD looks terrible relative strength wise. So if you give me a choice between the two, I'd have to pick Intel. That should do it. Great to have you all with us. You will find the replays on YouTube at 3 p.m., usually 3:30 p.m. Eastern. So keep an eye out for those. We will see you next week. It will be a half day, but we are planning on doing the trading room. So we will see you then. Good luck and good trading.